The management of Pidilite joins us to give us more details. Yash Upadhyay is speaking to the management.
See, as far as top line growth is concerned, in our belief, it is still subdued. While yes, you can look at our volume growth over a fairly significant base last year. If you would recall, last year, the third quarter was our best quarter. We grew volumes double digit. We grew the business about 17%. The fact that we have actually grown over that, in a sense, is a green shoot. But as you said, I would remain cautiously optimistic. I think we will look at the next 2 quarters before declaring success.
All right. And so a large part of the reason why we've seen such a strong performance on the operational front is the lower crude oil prices as well as the VAM prices. Could you also help us understand in detail as to what has been the average VAM prices in the last quarter compared to the corresponding quarter last year?
See, at the last quarter this time, the VAM prices were actually at their highest. Our consumption rate was at about $1,300 a ton. In this year, it would be between $850 to $900 a ton. And that, in a sense, has contributed to the lower material costs.
All right. And sir, is this expansion in your EBITDA as well as gross margins entirely down to the lower raw material prices, or are you seeing some amount of upscaling as far as your product mix is concerned?
See, we continuously on a regular basis keep upscaling our product mix. So this is volume and mix. Having said that, the largest part of that is simply benign input costs. We've always guided that we will maintain our margins at the 20 to 24% mark as a on a standalone basis. We're at the upper end of that, and we don't manage to a number, we manage to a range. So we're right now at the top end of that range.
All right. So the reason actually I wanted to ask you this is because another big player in a similar sort of a business, which is Asian Paints, they have said that they want to focus primarily on volumes, and their volume growth has been quite positive, but it has been down to the sales of their low value add products. That's the reason why I wanted to understand that would it entirely be down to the softness in the raw material prices, or even the product mix has improved for your company?
No, in our case, the product mix has improved from a premiumization point of view. While our focus obviously also remains volume growth, we are not looking at volume at any, we're not looking at, in a sense, bringing down the average realizations. So our value still continues to be higher than our volume. The focus going forward obviously has to be volume growth.
All right, so this would be a dual strategy where you continue to, target your margins at the same time grow your volumes as well. So then in that case, in light of the lower input costs, have you taken any price cuts in the last quarter? If yes, then are you likely to take any more price cuts in the upcoming quarters, or at least the ongoing one?
See, on a regular basis, across the board, we have not taken any price cuts. But wherever necessary, wherever price corrections are required on a regional basis on certain product lines, we continue to do that. So we've always said that we would like to maintain our price premium at a certain level. If input costs take the price premium higher, we will definitely take corrective pricing action. This tends to be selective rather than across the board. We've taken it in quarter 3. If necessary, we will take it in the coming quarters also.
So what has been that quantum of price cut? Could you help us with that?
Because it is in select, on a broad basis, it would probably be maybe 1%. But in certain categories, it may be higher. In certain categories, they may not be, because we operate, remember, across a large range of products. So very difficult to aggregate.
All right. And sort of word on the industrial products business. For now, at least as far as my understanding is concerned, for the last 4 quarters, we have been seeing strong growth in the industrial products business. Could you help us understand what really aided this performance in the previous quarter?
Yeah, see, as far as the industrial products business is concerned, a large part of the growth is actually due to exports. As the Chinese government has tightened up on environmental regulations within China, we have been one of the beneficiaries of that in the sense that we've always had compliant units who've been exporting. But as units in China have scaled down or shut down, some of the business has come to us. So a large part of the industrial growth is actually due to exports. and it's not due to domestic demand as much as it is due to exports. And this will continue at least for the next 2 quarters.